UnitedHealth Group, UNH, an investor's deep dive. Let's talk about UnitedHealth Group, or UNH for short, a healthcare powerhouse that doesn't always make the headlines, but is quietly shaping the future of medicine, insurance, and patient care in America. If you're wondering why Warren Buffett and other institutional giants are piling into this stock, it's time to pay close attention. At first glance, you might think of UNH as just another insurance company. But it's not. It's actually a hybrid of two massive engines, UnitedHealthcare and Optum. UnitedHealthcare is their traditional health insurance arm, while Optum is where things get really interesting. Optum handles pharmacy benefits, healthcare data analytics, care delivery, and more. Imagine a company that not only insures your hospital visit but also owns the clinic, manages your prescriptions, and processes your data. That vertical integration gives them a powerful advantage. Now, let's dive into the numbers. In 2024, UnitedHealth reported over $400 billion in revenue. That's more than the GDP of countries like Norway or Austria. Their operating income hit $32.3 billion, and net income held steady at around $20 billion. With over $24 billion in operating cash flow, this company is a cash machine. What about valuation? Their forward price-to-earnings ratio sits at about 18.8, lower than the S&P 500's average and even lower than their own 5-year average of around 20. That's especially compelling when you consider the consistency of their earnings. This isn't a high-flying growth stock, but it is a model of predictable profitability. Now let's talk intrinsic value. Using a discounted cash flow model, UNH's intrinsic value lands around $596 per share, depending on the assumptions. That's about 50% above current levels. Other valuation platforms like Guru Focus and Alpha Spread suggest the stock is trading at a 30% discount to its fair value. One of the most exciting parts of the business is Optum. It's now responsible for nearly half the company's revenue. Optum Insight, their analytics and health services arm, is projected to pull in around $3.6 billion this year with margins near 19%. Optum Rx, their pharmacy benefits arm, is expected to bring in over $150 billion, up from $133 billion the year before. This is the part of the company that is quietly evolving into a healthcare platform powerhouse. And this growth hasn't gone unnoticed. Warren Buffett's Berkshire Hathaway recently bought over 5 million shares of UNH, worth around $1.6 billion. It now makes up about 0.6% of Berkshire's equity portfolio. That move triggered a double-digit surge in the stock price. When Buffett bets on a business, the market pays attention. So why did he do it? Because UNH checks all the boxes for a long-term compounder. It has a huge moat. It generates recurring revenue. It serves a growing market, thanks to the aging US population, and it offers predictable, inflation-resistant cash flows. Healthcare is one of the few industries that continues to grow even during economic downturns. But let's not ignore the risks. The company lowered its 2025 EPS guidance to between $26 and $26.50, down from the earlier $29 to $30. Why? Higher than expected medical costs in their Medicare Advantage business. On top of that, the Department of Justice has launched an investigation into their billing practices, and the fallout from the 2024 Change Healthcare cyber attack is still being felt. These headwinds have created short-term uncertainty, but they've also opened up a long-term buying opportunity. UNH is working hard to streamline operations, invest in AI-driven efficiency, and expand its Optum reach. If successful, it could come out even stronger. So what should investors watch next? First, keep an eye on operating margins, especially in Optum. Any improvement here could signal stronger execution. Second, monitor regulatory developments. Changes in Medicare Advantage reimbursement or antitrust rulings could impact profitability. Third, earnings reports. UNH usually beats expectations. If it misses, that's a red flag. Also, watch for acquisitions. UNH loves to quietly scoop up healthcare startups and tech platforms to expand its ecosystem. Any news on that front can hint at where they're headed next. Here's the bottom line: UnitedHealth Group isn't just a stock. It's an infrastructure play on the future of American healthcare. It's not flashy, but it's foundational. With stable cash flows, strong leadership, and a growing digital edge, UNH could be one of the most compelling long-term holdings in the market today. Just remember, this isn't financial advice. Always do your own research and weigh your own risk tolerance. But if you're building a portfolio for stability, growth, and relevance, UnitedHealth Group is worth a very close look.